Hello, and welcome to the viewing of a life-changing video that has the ability to alter the course of your entire financial future moving forward. Have you ever wondered why you cannot get ahead financially? Hi, my name is Anithia Powell. I am a Senior Marketing Director with WFG Transamerica. What I'm about to share with you is a business enterprise that will give you insight to why so many people are failing financially. This presentation will show you what the top 5% or the wealthy class knows about money and how they get their money working for them. Then finally, I will share with you a way to put yourself in a position to earn lots of money so that you can leave a strong financial legacy behind for your family and not debt. Let's get started. First of all, the name of our company is WFG. We are World Financial Group, and our mission is to help people from all walks of life to build a better future, not just the top 5%. We are looking at people from all walks of life to build a better future. And while you're looking at this presentation, I would like for you to consider these 3 questions. Number 1, do you know someone who can benefit from this message? 2, can this information help you, your family, and friends financially? And number 3, are you intrigued by this business? First of all, the financial strength of any company is extremely important when you're doing business with that firm. In our company, with World Financial Group, it is a part of the Aegon Group, and Aegon is a global financial services organization. And while Aegon owns many companies worldwide, here in the United States, they own Transamerica and WFG. Now, Transamerica is the insurance arm, and WFG is the marketing arm. So WFG as a company does not own any product and services at all. Okay, we're the marketing arm. Now, with that being said, there is strength in selection. What do I mean by that? We at WFG have a strategic alliance and partnership with the companies that you see here. As a matter of fact, we have that strategic alliance with over 120 different companies. Other companies like Gerber, Jackson National, Foresters, these are probably some of the companies that you've heard of as well. And the reason it's important to know that WFG have these partnerships with all of these different companies is because of this. If I'm sitting down with 10 different families, all 10 of these families may have different financial needs. I'm able to take a look at what that family really needs, and now I can go back to all of these 120 different companies we represent and say, okay, which one of these companies can fit the person's or this particular family's need? But if I only, say for instance, I'm just a one-stop shop company, I'm just an independent company, like a State Farm as an example. Can State Farm show you what Pacific Life have to offer? Can they show you what Nationwide have to offer? No. Well, here at WFG, because we have partnerships with all of these 120 different companies, I'm now in a position to actually partner up a company that can fit your family's specific financial need. Let's just say you want to retire when you're 50, and you may be 40 now. I may be able to go and say, okay, which one of these companies can help me get this person or this family to fit their financial need the best? That's why it's important to have strength in selection. And these are some of the things that we specialize in: fixed annuities, life insurance, index universal, long-term care, and so much more. The much, much more is we show families how to get out of debt, how to save more money, and how to pay less money in taxes with the companies that we represent. So what is our mission and our vision? That is to leave no family left behind. To do that, this is our motto. We look at Family A, which is many families in Middle America. These families, they earn $100,000 or less. Okay, these people a lot of times are worried about, their job. They have a job, which my acronym for job is just over broke or jail operating as a business. Okay, these families have 401k plans that they really don't even know how they work. They have an own term life insurance, which is the temporary kind. These people rent a home. Some of these people who are renting homes have for generations have did nothing else but rented homes. These people are putting money in the bank because they know nowhere else to put it. They have credit card debt, minimal tax advantages, no advisor, no plan, and again, this represents the majority of the population. Well, let's take a look over here at Family B. Family B represent many families in wealthy America. These people earn anywhere from $250,000 or more. They're business owners. They own permanent life insurance. You hear a lot of ownership going on this side. These people are home owners. They have a diversified portfolio. These people are debt-free. They have a maximized tax advantages. And here they have a financial professional. And I want to stop here for a moment. A financial professional. If you wanted to get a black belt in karate, wouldn't it make sense for you to hire a coach? Or if you wanted to try out for the NBA, wouldn't it make sense for you to hire a coach to get into the tip-top shape that you can possibly get into? Well, why is it that when it comes to our money, we're left to chance that alone? We're left to do that alone. No one to coach us, to try and teach us what we need to do. Well, that family over there in Family A, if they had a financial professional, someone teaching them what to do with the money that they do have, don't you think it would probably make it a lot easier for them to amass more wealth or to get into making more money because they would have somebody coaching them what to do? Well, back over here in Family B, they have that financial professional. And again, that represents a small percentage of the population. Our focus and our mission is to show Family A how to go from that Family A to coming over here to being like Family B. Do you think Family A would be mad at me for showing them how to look like and imitate Family B? I don't think so. Most people don't plan to fail. They just simply fail to have a plan. And what we do here at WFG is we give them a step-by-step game plan on exactly what they need to do to go from looking like Family A to looking like Family B. Okay, now, here's what the wealthy or the top 5% know about money that most middle Americans do not. They know that there is 4 financial cornerstones when it comes to building wealth. When it comes to building and creating wealth, these 4 financial cornerstones are important. The first one is protection. The second one is growth. The third one is safety. And the fourth one is tax advantage. If your money is not doing all 4 of these things at the same time, then you're missing out on that financial independence piece. Okay, let's go into and talk about all 4 of these. First of all, the number one place that most people are saving their money right now is inside of a 401k. That's the number one saving place for the majority of the working population in the United States, 401k or 403b. Okay, out of all 4 of these financial cornerstones, the 401k only qualifies for one of the 4, and that's growth. The 401k does not have protection. It does not have safety. All you have to do is look at what happened in 2008 when your 401k became a 201k, and it definitely does not have tax advantages. It's tax deferred. Okay, so if the number one place that most people are saving their money have only one of the 4 financial cornerstones to building wealth, it's no wonder most people are not winning in the money game. So let's take a further look. When it comes to proper protection, this is what we're talking about. Disability, okay, long-term care, retirement, and life insurance. Did you know that 1 year worth of disability can wipe out 10 years worth of saving? And most people who should have disability protection do not have it. And also life insurance. Did you know that life insurance is the most misunderstood financial concept there is? When people think of life insurance, they think of death. Wealthy people know that life insurance can do so much more for them and their family. Life insurance can help with these things. It can create living benefits. Did you know that there are programs out here to where if you had a stroke, heart attack, or you suffered with some type of cancer, that your policy, your life insurance policy, can pay you while you're still living? You can have access to that money. Also, life insurance can supplement retirement income. After having so much money put into a life insurance policy, you can tell the insurance company, hey, I want you to start sending me $60,000, $80,000 a year to help supplement my retirement. This is what wealthy people know. It can also cover educational expenses for your children. It can replace income for your dependents. It can pay final expenses, create an inheritance for your heirs. It can pay federal and state estate taxes. It can also create a source of savings. Finally, it can provide funds for charitable contributions. There are mainly two different types of life insurance. One is term and the other one is perm, okay? The term is the one that family A had. It was that temporary kind. The permanent was the type that family B had. And there's different types of term and there's different types of permanent, okay? Compound interest. Let's talk about growth. The rule of 72. This rule of 72 is nothing that is new. It's not specific to our company. It is industry-wide. As a matter of fact, Albert Einstein is the one that came up with this rule of 72. The rule of 72 simply says this. You take the number 72, divide into it the rate of return, and it will tell you how many years it will take for your money to double. For example, if you had a 1% rate of return, 72 divided by 1 is equal to 72. So that would take 72 years for your money to double. So at age 29, if you started off with 10,000, saving it at 1%, it will take until you are 101 years old before that 10,000 doubled to 20. Now, I don't know about you, but 72 years added on to my life, and that is just way too long to wait for my money to double. But this is where the most people are saving their money in instruments at 1% when it comes to coming outside of that 401k. Most people are saving their money in a bank, which banks right now are paying less than 1%. Now, what if I can show you how to get 4% interest on your money? 72 divided by 4 is 18. Now your money is doubling every 18 years and you got an extra double. Now at age 65, you have $40,000 there. Is that enough for you to retire on? I don't think so. What about 6% interest? 72 divided by 6 is 12. Now your money is doubling every 12 years. Now at 65, you have $80,000. Still not enough. What if I can show you how to get a 10% rate of return? Most people would like to know where that is, right? Now 72 divided by 10 is 7.2 years. Now your money is doubling every 7 years. Now look at age 65. Now there's 320,000 there. 7 more years, you're 72, and now your money has doubled 640,000. Now, if people are saving at interest rates of less than 1%, but yet when it comes to credit card debt, which credit cards right now, the average is 29.99%. So if people are paying back, and the rule of 72 works that's the same way with credit card. So if people are paying money back at higher interest rates, and then they're saving it at lower interest rate, it's no wonder most people are not going to win in the money game. Now, I've helped hundreds of Medicare recipients with their Medicare, and the majority of people, when they retire, the majority of people are going to retire on less than $2,000 a year. If your goal and focus is to retire on $10,000 or more, then we definitely need to sit down and have a conversation. Let's look at some other options for your money. First of all, there's 3 different ways or 3 different options for your money. There's fixed. Knowing what you know now about the rule of 72, is your money going to grow fast for you in this fixed account? I don't think so. Look at this one, variable. What does that look like? It looks like a roller coaster. When the market goes up, you make money. When the market goes down, you lose money. That doesn't look very appealing for people who are very close to retirement. Okay, that's the stock market. The last one is index. Most people have not even heard of an indexed account, nor do they really know how it operates. So let's go into it. First of all, you can see that it almost looks just like this one over here on the left-hand side. It looks like the stock market, but it's grayed out. Okay. What happens in an indexed account is as the market goes up, you get a lock on your money. Because when the market goes down into the negative, your money is sitting there with the lock and you don't participate in the losses of that market. So it sits there and waits until the market goes up again, and then you get a lock on your money. Because if the market goes down into the negative again, your money does not participate. So basically what an indexed account is you get the highs of the market, but you do not participate in the losses of the market. So it's almost like betting on a horse after the horses come in. Okay. And as a matter of fact, LeBron James, who is a millionaire basketball player, and Warren Buffett, who is a billionaire investor, LeBron James asked Warren Buffett, he said, Mr. Buffett, what should I do with my millions so that my millions can become billions like yours? Warren Buffett told him, he said, son, put your money in indexed accounts. You cannot lose. So you cannot lose your principal in an indexed account. Now, knowing about all three now, how would you like for your money to grow? The next one we want to talk about is risk. Okay, because market risk, the impact of losses, it can hurt more than you think. If I gave you $100 today, and at the end of the year, I said, okay, you lost 50% of that $100, how much would you have? $50, of course. But then if I tell you next year, the market went back up 50%, most people would think that you would have $100. But in actuality, you only have 75 because 50% of $50 is 25. 50 plus 25 is the 75. In order for you to get back to 100% or to $100, you would need 100% rate of return. So what we do is we tell people never put your money in a position to lose it in the first place. That's why we are so huge on index accounts. Now, let's take a look at number 4, the fourth financial cornerstone, tax advantage, okay? When you're saving money, you want to be sure to consider the effects that taxes can have on your income. So let's take a look at these accounts. So a tax now. Would you rather be taxed now, later, or never? Most people would tell me never, but most people have their money in these first two columns, tax now. Tax now are things like savings account. These are your bank accounts, your certificate of deposit, your CDs, your mutual funds, your money market accounts, your stocks, and your bonds. The way that these accounts work is like this. Say, for instance, you put money into that certificate of deposit and you earned $500 in interest on that money. Well, Uncle Sam is going to say, okay, you earned $500. We're going to add that $500 to your taxable income, and now you have to pay taxes on that money in the same year that it was earned. Now, let's take a look at tax later accounts. These are things like 401ks, 403bs, 457 plans. You have your IRAs, your SEP IRAs, annuities, whether it's fixed or variable, your savings bonds, your pension plans, your thrift savings plans, your TSA accounts. The way that these accounts work is like this. Let's just say that 401k, for example. When the money is really small in your 401k, Uncle Sam does not want you to pay taxes on it yet. He wants to wait until it gets really, really big, or when your account value is really big. Then Uncle Sam said, okay, I've been a silent partner for all of these years. Now it's time for you to pay the piper. Then if you decide that you want to wait until you're 70 and a half or older, If you do not pull that money out by the time you're 70 and a half, guess what? Not only are you going to pay taxes on it, but you're going to get a penalty. You're going to pay a penalty for not allowing Uncle Sam to take it out sooner. So 401k. Now, let me ask you this. Do you think that taxes are likely to go up in the future or down? Exactly. Taxes are likely to go up in the future. The reason why wealthy people will never put their money in things like 401ks is because they will not put their money into something to where they have no idea what the tax rate is going to be in the future. What if the tax rate was 50%, 60%? We have no idea or no way of knowing what it's going to be in the future. So I tell people, if you have a 4 in front of it, if it's a 401k, a 403b, or 457 plan, those plans are really for the government, okay? Because they are going to tax those accounts considerably, even the part that your employer has matched, okay? Now, let's take a look at the last column, tax advantage. These are things like your Roth IRAs, and while they are good, there's a limit of $5,500 a year that you can put into that. You have your municipal bonds, your 529 college plans, your health savings account, your long-term care benefits, as well as cash accumulation and insurance. These are your tax advantage plans. And the person that invited you to this webinar will be able to sit down with you and go over some really strong ways for you to take advantage of the tax advantage column. In order for us to do what we do, we need to have a financial needs analysis done. These are the 6 steps to financial independence. Cash flow. We show you how to earn additional income and also manage your expenses. Number 2, emergency fund. Most people don't even have an emergency fund, which is the reason why they are in number 3, in debt. So we show you how to create and build an emergency fund, and we show you how to strive to eliminate debt. We show you how to get out of debt sooner with our help than without. Number 4, we show you how to have proper protection, protect against the loss of your income. Most people have insurance on their cell phones, on their houses, on their cars, but when it comes to protecting their income, they do not have what we call money insurance. They do not have protection against the loss of their income. If you lose your income, guess what? Now you can't pay for the house, the car, the cell phone. So let us show you how to protect against the loss of your income and protect your family assets. Then number 5, we show you how to build wealth. We show you how to outpace inflation and reduce taxes. Also, we show you how to have professional money management. And number 6, once you've built the wealth, doesn't it make sense to preserve it? So now we want to show you how to preserve your wealth. Now the singer Prince, he did a really good job at building wealth, $300 million estate. But when it came to preserving his wealth, he did not do a really good job there. This financial needs analysis that we're talking about here, normally it costs anywhere from $500 to $1,500. And I know you're probably thinking now, okay, so what's the catch? There is no catch. With our company, we do this needs analysis complimentary, okay? Other companies are looking at the top 5% to do this needs analysis on. We're looking at the average middle American family, okay? In order for us to do what we do, we need to find out exactly where you are financially. If you tell me that you want to retire at a certain age and have a certain income, in order for me to get you to where you want to be, I need to take a look at where you are right now. Does that make sense? Great. Wouldn't you agree that timing is everything? From 1946 to 1964, there were 78 million babies being born. During that time, wouldn't it make sense to go into the baby food industry with so many babies being born? Millionaires was made during that time period. Anybody who went into the baby food industry at all, Pampers, food, millionaires was made. because there were so many babies being born during that time. Then as the babies got older, they needed toys to play with. Ken and Barbie got put on the map. Okay, Mattel, Lionel, Play World, all of these companies, millionaires were made because there were so many babies being born. Then as the babies got older, guess what? The mom and the dad needed to work. Fast food became prevalent. Companies like McDonald's got put on the map. Burger King, millionaires was made during that time. And as the kids got older, they wanted to start driving cars. Muscle cars like the Ford Mustang got put on. Auto industries were making millions of dollars. Anybody in the auto industry during that time made millions and millions of dollars. Okay, let's see. The next boom that happened was the real estate boom. Okay, because now these babies or these kids, these adults now, they're wanting to buy homes. Real estate interest rates were 18%, and they were buying them like they were lollipops or something. Millionaires were made during that time. Now, what is the next big boom following the baby boomers? Retirement. The retirement boom is larger than all of the rest of these booms put together. Okay, over the next 20 years, $63 trillion will exchange hands. Most of these people, when they go into retirement, they're not going to know what to do with their money, how to make their money last longer than them. Most people will outlive their retirement money if they don't know the proper things to do with it, which is where we come into play. Okay. Then coming behind those 78 million baby boomers, look, is 112 million people born between 65 and 94. That's the Generation Xers and the millennials. And it says here, if you would like a chance to be wealthy in your lifetime, wouldn't it make sense to be in the right place at the right time? Now is the right time to be involved with financial services. If you look at the commercials that are on your television, about 1 in 4 commercials have something to do with a financial services company. Let's take a look at the state of the industry right now. Nearly half of all existing financial advisors right now are over the age of 55. That means nearly a third of them will retire over the next decade. That's going to leave an estimated shortfall of about 200,000 advisors by the year 2022. That puts you in a very, very interesting platform here. A very unique business platform is that, first of all, there's no financial services experience necessary for what it is that we do. You can test drive the opportunity and start part-time. There's no time clocks. There is unlimited earning potential here, unlimited. Some people are capped out at their jobs. Most people don't even like their jobs. What we offer you here is the opportunity to be a business owner with unlimited earning potential. We're huge on leadership development and mentoring business model. Strength on your side when it comes to Aegon, $750 billion company. The power of choice, the fact that you will have 120 different companies at your disposal. Business expansion. We are in all 50 states, Canada, and Puerto Rico. By the way, we get paid 2 days a week. We get paid every Tuesday and Friday here in the United States. And in Canada, they get paid every Monday and Wednesday. And in Puerto Rico, it's every Thursday and Saturday. Also, there is the WFG business system. There is a system that is in place here with this company. And if you put the system in place, the system will run your business. Just like McDonald's have a system, their number one is the Big Mac. It doesn't matter which McDonald's you go to, the system is the same everywhere you go. If you buy a franchise with McDonald's, you do not have to wake up and figure out how to run that business. They have a step-by-step manual that explains exactly what you need to do in order to run your business. Equal opportunity for all, a diverse field force. We grow the underserved market. The company financial needs analysis is a part of the platform. We have all 120 different affiliated companies, world-class recognition and events, technology and business tools. Most of the technology that I use is my cell phone to conduct business with, whether it's here in the U.S., whether it's here in the state of Georgia or if it's in another state. I can handle all of my business pretty much from my cell phone. The need has never been greater. Now more than ever, people need WFG. Now, these companies that we're affiliated with, they already have all of their lawyers, companies like Nationwide, Transamerica, Voya, Prudential. They already have their attorneys affiliated with these companies. Their attorneys got with our attorneys, and that's how the relationship with all of these Fortune 100 and Fortune 500 companies were built. All right, let's talk about quickly the compensation. First of all, there's 22 different ways that we get paid with our company, but we're just going to talk about a couple of them right here. Personal income. If you decide that you want to just come here and work by yourself and not build an organization or a strong business or a strong team, then you can do that. You can come here and have personal income. And on your own pen, as helping just 4 families a month as an associate, that's over $50,000 a year. All right, as a senior marketing director, helping those same 4 families, that's almost $100,000 a year. Okay. Now, if you decide that you want to come here and you want to build agency income, this is more like a broker, okay, where you have overrides. With agency income, managing a 5-person team, that's over $200,000 a year. Okay, expansion income. Like I said, we're in all 50 states, so there are no geographic territories to limit your growth. You can expand anywhere in the United States and certain U.S. territories. Also, we have bonus income. Just for hitting certain numbers, the company is going to throw extra money at you. Then number 5, recurring income. This recurring income is what draws so many real estate agents to our company, because the client that you get today, you continue to get paid on that client year after year after year. So here's what the actual income look like with our company. Okay. Finally, the company is huge with recognition. They love to pay for different trips for us. We go on trips, taking vacations, traveling with a lot of our business partners. When you feel good, you do good. Okay. So the next step, let's review the 3 questions we asked you to consider when you contemplating a career with WFG. The beginning of this presentation, I asked you, do you know someone who can benefit from our message? You know, can this help you, your family, and friends financially? Or are you intrigued by this business? The next step is, hey, you may want to just get your complimentary financial needs analysis and say, hey, look, what can you do to help me financially? We can do that. Or you may want to look at this business and say, okay, let me start part-time. You don't have to give up anything that you're doing right now. Once your part-time income with us exceeds what you're making full-time, and I don't care what it is you're doing full-time, part-time here can exceed whatever you're doing full-time. Or you may want to do like I did. I looked at this opportunity with this company and went into it full-time and never looked back. Okay, if someone offers you an amazing opportunity and you're not sure you can do it, say yes, then learn how to do it later. That's what the wealthy people do. We believe in helping families to rise. Now, what I would like for you to do is to get back with the person who invited you to this webinar. And at the end of this webinar, we're going to ask you what your interests are. So take time to fill out this short, quick survey.